Anyhow, we're going to start right now. Welcome back to the Main Street Planning Group Life Insurance Forum of New York. We think it's very important, knowing what we know now, where so many carriers have left the market or thinking of leaving the market, that many of the carriers have stayed and continue to stay and actually provide more product and more solutions for your clients. And I think the differentiating fact of what we all have to focus on today is the fact that during COVID, one of the things that have happened is the rise of these virtual selling. Actually, I was quoted in AM Best magazine last week quite about that. They asked me some questions. How has that affected our business? It hasn't affected our business, but to the consumer, they're looking at these direct marketers as a solution and not reaching out to people, and it's always about price. But it's more about, it's not, anybody in this business knows it's not just about price, it's about who's going to pay me when it's time to pay claims, and who am I going to call if I have a claim. Like I'd like to have a person to call if I have a claim, an agent, not some 1-800 number. I'd like to have a real person, a real agent that can help me through the process. And I can talk from a personal standpoint. My daughter, about 6 years ago, for those of you know her, don't know her, she mid-20s, had Geico. I can say it, it's different world, car insurance. Why? Because Geico was the cheapest and we figured we'd save money. Well, she was in a bad car accident and Geico didn't do crap for her. And their whole claims process was very limited on the injury side. But you wouldn't know that unless you experienced it. But it wasn't like I had a local rep fighting for me. And I've seen this happen with long-term care claims, with life claims. I had a client who died in a truck accident. He was a truck driver. That was his biggest fear. He had about $500,000 in accident policies that he was buying at Sears and Roebuck and wherever it was, he bought it. $10 a month for this. And because they had me, we got him all those claims processed. Without me, they were saying, oh, he had a heart attack. It wasn't a result of an accident. But without that guy fighting for him, for those clients, he would be nowhere. So as an agent or as an agency in this market or in any market, you want that agent relationship with that client to get the best underwriting. We had another situation that happened. Steve just fell offline. There he goes. We had another situation that happened with Policy Genius just a week or two ago, where someone was declined coverage because they had a high calcium score. It may have been AIG, by the way. Sorry. But truth be told, he had lost a lot of weight. He was doing a lot of follow-ups with his heart. No diabetes, great things. We were able to get him coverage with another carrier because they had us. But now he's got an MIB hit because he thought it was a do-it-yourselfer. He's going to pick up $1 million a term. And that do-it-yourselfer is now penalized because now it was an uphill battle because he's got that decline on his record and a lot of stuff has been looked into. So we try and prevent that with our advanced underwriting and how we do things with Carmen, who I know is on the line, is very helpful as an experienced underwriter in positioning the cases properly and knowing what carriers to go to and how to position them. So with all the changes in the marketplace, I'm happy to report that US Life / AIG is still very strong and very prominent in the New York market and has done a lot of great things and has been there for us through this whole COVID process and is continually to provide product. And I thought it would be very relevant for them to go over what their portfolio is today. And with that, I'm going to have the wholesaler, Steve Burns, who's been with us for a number of years, to take it away.
Neil, thanks very much. It's our pleasure to be here. I'm Steve Burns, the Regional Vice President for AIG, US Life, American General. My internal partner, Joyce Chan, is on as well, and she'll present a little bit later in our time slot. And, despite Joyce getting sick of this joke because she's heard it a million times, I always like to say, whenever I've done something for you, it actually was probably Joyce, and I'm just taking credit for it. So she is awesome and a great partner to me and to all of our agencies out there. A couple of things I wanted to just mention before I jump into the product portfolio. One is just a general statement about AIG and US Life in New York, and that we do continue to be committed to the marketplace and to New York. And we do have our full product suite there. I mean, there are some minor differences, but we have every one of our products available in New York, and we will continue to support you and your efforts to help people plan for their needs, because Neil's exactly right. You can never, replace an agent or a planner, with a website or a quote engine. What we do is really important, both on the front end, but also on the back end, as Neil just talked about, helping folks navigate, the claims process and other post-issue functions like that. The second thing I want to mention is just a quick commercial for Neil and Main Street Planning, and that you guys are all in the right place. I mean, they really do it right and do it different than many agencies out there. And Joyce and I get to work with quite a few, and you can really see the ones that set themselves apart, from relationships with the carriers to advanced case design to the aforementioned expertise of Carmen and her direct line to senior underwriters at AIG and many other carriers. They really are unparalleled in their expertise. So kudos to Neil and his organization for doing a great job. So we're going to do a relatively brief, product review for what we have in New York. I'm going to touch on a bunch of things because we do have a lot of product in New York. So once we get to the question and answer session at the end, or if you want to, interject with a question, I'm fine with that too. We can cover as much as you all want to during our time here. So the first thing I want to talk about is both a product and a process, which is our Agile Underwriting Plus, which is AIG's non-med accelerated underwriting program. Now, our program is a bit more targeted or narrow than some of the ones out there. I know that each of you have exposure to carriers that may have higher limits or age maximums within their non-med program, but we've done ours this way for a reason, in that we're really keen on keeping our pass-through rate, pretty high. And today, our pass-through rate is 70%, which is far higher than most programs out there today, and why we've kept this program a bit narrower. So the way our program works is it's currently focused on our IUL products. So I do want to be clear about that today it is IUL only, our max accumulator product, which is our LIRP retirement planning product, and then our value protector, which is our protection IUL, with a life expectancy plus guarantee that we do quite a lot of business in. I'd say that's probably our flagship product today, especially in New York, where it compares very well to the marketplace out there. So those two products are available within Agile Underwriting Plus. And really, when you look at our program, I think there are some key differentiators. First, the parameters are up to age 50 and up to $1 million. And yes, I do know you've got carriers that'll go up to 59, even some carriers that will go up, 3+ times higher than us, for that maximum face amount. But again, we've done this for a reason, to be able to, actually attract cases that can really make it through, and to maintain that 70% pass-through rate. So a couple of things to point out is that the products available and the underwriting available within this program are the same as our regular street products. It's not separate pricing, not separate products. If you're preferred through full underwriting, it's the same cost as if you get approved preferred non-med. You can get between standard and preferred plus through our program, and it's exactly what you'd think. If you qualify to go through the program, there'll be no exam, no labs, no APSs. We're just going to do the MIB, MVR, script check, and then our internal database and credit check searches. And just for the record, we do not use LexisNexis, which I know is a bad word for a lot of folks out there and can lead to some false positives at other carriers. So we're pretty proud of this program, even though it is a bit narrower than others with that 70% pass-through rate. And we do also now, we've just instituted over the last couple months that we have instant decision making. So when the client's on the phone with the interviewer, they'll be able to tell them right then and there whether they qualify to continue through the process non-med, and we're going to refer you over to new business to start the issue process. Or if you don't, let's schedule an exam right now. which is often where we have a big disconnect in these programs. If you can't schedule that exam right then often those clients are in the wind and we never get them back on board. So that was a nice addition to the program as well. Another differentiator that we have here is that we do allow our chronic illness rider through the program as well. And I'm going to talk about this rider in a bit more detail shortly, but many of the non-med programs will not allow this. We will. And all you have to do, it's still non-invasive, is just fill out our chronic illness app supplement. And assuming there's no red flags on that, you still qualify to go through this program in 5 or 6 days and to continue on through. And I should point out too that 3/4 of our non-med cases do get through in 5 days or less. So a pretty good success rate there too. So talking about the IULs a little bit in general before I move on to the next product, obviously the demographics of your specific case is going to matter, but particularly that value protector product, we compete very well on. And, it's not that we're just good at premium or just good at guarantee length or just good at current performance. We're good at all three. Many of the carriers out there are really good at one of those things and then will lag a bit on the rest. And we do really well on each. They'll typically see that guarantee into the late 80s or early 90s, usually 4, 5, 6 years beyond life expectancy if you're doing a current solve to 105 or to lifetime. And no matter how you want to bend that product or which variable is the most important, it's a very flexible product with a very strong price chassis below it. So it's a great option to look at, whether you're already using protection IUL or if you're somebody that's used GUL traditionally, which we still have, by the way, and I'm going to talk about in a minute. We've found a lot of pricing efficiencies for folks 45 to 65, where the protection IUL makes more sense than the GUL given today's pricing and interest rates, and is still a very safe place for most clients to be. So we can certainly talk more on that topic during the Q&A section, but I'm going to move on and talk about our term portfolio briefly. So term, you're like, well, it's just term. You just run the quote and that's it, right? Well, that is true, of course, but we do have a couple differentiators with our term portfolio that I want to point out. The first goes directly to the name. We call it selected term for a reason. So with most carriers, of course, you have 10-year term, 15-year term, 20-year term, maybe 30-year term, and that's it, just every 5-year interval. Well, we have 10-year term and we have 35-year term, but then we have also, in addition to that, we have every duration between 15 and 30 year. So what I mean by that is if you have a client who has a mortgage with 17 years left on it, we can give you a 17-year term, 23-year term, 28-year term, any duration between 15 and 30 years, we're able to dial into, which is incredibly useful for us for a couple of different scenarios. If we have somebody with a specific need like that doesn't match up directly to the 5-year intervals, it's a great tool to be able to go in and not have to overinsure or go in and underinsure for a couple of years too little. We can specifically meet that need. But also, if you have a case that comes back other than applied for, it's much easier for us to be able to back down just a year or two off that off that duration and maintain that same premium rather than having to go down a full 5 years, pivot to another carrier, or get the client to pay more premium. It's a pretty useful tool there. The second thing I want to point out about our term portfolio is the flyer I have up on the screen right now, which is showing some comparisons for rated term. If you have a rated term case or an insured who you think is going to be rated, you have to look at US Life, and that we have a pretty significant pricing advantage for rated term. The reason we have this is that we base our term ratings, the pricing on the term ratings, off our standard plus category, whereas most carriers, virtually every carrier, bases them off of standard. And so that will give us a 1 to 2 table pricing advantage over everybody else out there. This example that you see up there now, who's a 40-year-old male, you can look at this table B and table C pricing, and not only are we number one, but if you look at that table C pricing, our table C pricing is better than everybody else's table B except for Pac Life in this example, who I'm not even sure is available actually in New York. So when you think about where we stack up on rated term, we're going to always have a pretty big advantage there. Term conversions I want to touch on as well. We do have convertibility available through the entire duration through age 70. Now, a quick caveat to that, that there are a handful of older term series with us that have different age, age cutoffs that are contractual, some that are 65, some that are 75. So it's always worth bringing those to Neil to check for sure, as we can look those up pretty easily and let you know, yes, it is age 70, which is our current guidelines, or know that that policy has a different contractual convertibility period. But in addition to that, we do bifurcate which products are available. So for most term durations, you have the first 10 years to convert to any of our currently available products. So the value protector I just talked about, our GUL, the same ones that you would sell in a new business sale, are available for the first 10 years, and only 8 years for 10-year terms. So for 10-year term, it's 8 years. For all other durations, it's 10 years. And then thereafter, we have a conversion-only product, Protect Extend IUL, which, to be clear, it is a conversion-only product, so it is more expensive, and you wouldn't want to sell it if the client's still insurable. But as far as conversion-only products go, it's a pretty neat product that has relatively decent pricing, and it has return of premium windows and a pretty wide choice of investment allocations, and a guarantee that you can push out past age 90 as well. So there is some meat to the bone there, but again, it is a conversion-only product. So just want to be clear about that. So, for term, that's really the story. The three things to keep in mind with us are those selected term durations, the rated term advantage that we have, and then our convertibility options. A pretty good story overall. And term's usually just a boring 15-second conversation. So the next thing,
and I have to say, I'm sorry to interject, but
no, please do.
we running into clients all the time with a lot. AIG's been in the marketplace, probably the biggest and the longest with US Life. I mean, they sold a ton of business in the 80s, the 90s, the 2000s. So when you're doing your client reviews, you want to look at their term policies. You want to see if it's convertible, what it's convertible to. Don't wait until it's too late, until they're uninsurable, and then they want to do this or do that. I caution everybody with the changes that have happened in the state of New York, and I say it over and over again, you look at these old MetLife policies, they're not paying commissions on a lot of their conversions. It's only to a very expensive whole life. ING, they're paying no commissions on conversions. So if you sold an ING policy 5 years ago and, eventually you want to convert it or do whatever, I mean, it's great to service your client. You should be servicing your client, but you should get paid to service your client as well. And I think that's very important to understand. I don't know how the state of New York has allowed it. Aviva, they have no product to convert to if you sold an Aviva product inside the state of New York. These are very serious issues for clients. And there are millions and millions of clients that people have sold them a policy or walked away, or they bought a policy from Policy Genius or Select a Quote, and they did it online and they did it themselves. They don't know what they have. They need to be reviewed. And, COVID has cost us a lot of these face-to-face meetings, but it shouldn't create a situation where we're not in touch with our clients. We're continually in front of them, looking at their policies. Go ahead. Sorry.
That is absolutely true, and a great point, Neil. And just for the record, we do pay commissions on conversions. And you actually gave me a moment to reflect and realize I left out one aspect of convertibility that I think is worth mentioning, and that we do have a program that lets select classes of policies convert and add our chronic illness rider in the same non-invasive way that I mentioned for the non-med program, which would again just be filling out that chronic illness supplement and not triggering any additional underwriting. So if you have a policy, a US Life policy that's less than 5 years old, age 60 or younger, standard or better, we would let you convert and add that chronic illness rider, which I promise I'm going to talk about in just a minute, without any further underwriting other than filling out that chronic illness sup. So pretty good, pretty neat little aspect to our convertibility. So the next thing I want to touch on, and I won't spend too much time on this, but our GUL is still available in New York. It's still, very strong within that market. General comment, of course, being, as I alluded to earlier, that interest rates were low. They're lower than they've ever been, and that means GUL is more expensive than it's ever been. But we still have it. We still sell a fair amount of it, and we still believe in it in the right place. I would just, again, encourage folks, if you've got somebody on the younger side, that it might make more sense to at least compare this with the protection IUL, or certainly to show the client both and see what they think. So anyhow, our GUL still very competitively priced. Most GULs, again, it should be a 15-second conversation, just like the term, right? It's just term for life, guaranteed premium for a guaranteed duration for a guaranteed death benefit, and that's it, right? Well, that is the case with a lot of GULs out there, but ours is a little bit different, and it has a few other features that add some flexibility to it. We like to call this piece 5 ways to access cash, when you usually have 0 ways to access cash on a GUL, right? Even if you have a big 1035, it's usually gone within the first couple of years because of how the internal pricing and the shadow accounts work within these products. Ours works a little bit different in some ways, and I'm going to do these points out of order so that I can then launch into the chronic illness rider at the end of this. So the first thing I want to talk about is point number 3, which is guaranteed cash value growth. You say, what? Cash value and guaranteed cash value in a GUL? And the answer is absolutely yes. So the way that ours works is that it starts to build cash in year 10. And by the time you get out beyond year 20, there is some decent cash value in there. Now, I don't want to compare this to a VUL or an accumulation IUL. It's not going to be cash value like that. But inside a GUL, where you normally have nothing, where it's normally just an illiquid term for life policy, to have some value there that you can tap, whether you have an emergency or you no longer have the need for the life insurance, is a huge piece of flexibility that we have that nobody else does out there. In addition to that, if you look at points 4 and 5 here, we have 2 return of premium windows that are included with the policy. So these are not riders you have to add and pay additional premium for. These will automatically be included in the policy. As long as you're illustrating to age 100 or beyond, these will automatically fund and include inside your policy. And so the way they work is at the end of the 20th year, you have the chance to just walk away with 50% of your basis, no questions asked. And at the end of the 25th year, you can walk with 100% of your premium, no questions asked. So between the guaranteed cash value and these 2 return of premium windows, it's 2 huge additional parts of flexibility that we have that come with the policy. You're not paying anything additional for it. In addition to that, we have a couple riders that have a cost that you can add to our GUL. The first one is the LIS rider, Lifestyle Income Solution. And given our time limits today, I don't want to go down too long of a rabbit hole on this, but we can, again, either address this further in Q&A or offline afterwards. But this Lifetime Income Solution rider is one of those things I referenced earlier that we have in New York that nobody else does. And frankly, throughout the country, even non-New York, nobody else has a rider like this. What this is a longevity rider that lets you turn your face amount, your death benefit, into guaranteed income. So not the guaranteed cash value, not some other lesser figure within your policy. It's your actual face amount. So the policy that they have up here is $1 million policy. And how this rider works is once you get to age 85, if you want to trigger the rider, you can start taking 10% of that face amount as guaranteed income each and every year until you spend it down, which would of course be 10 years if you took the full 10%. So this is a pretty interesting tool that we've used. Is emergency income, is a longevity rider if somebody lives longer than they thought they would, or is a hard coded part of your retirement plan. As you think about it, how do we normally illustrate income? 65 to 84, right? And so then what do you do once you hit age 85? If you're still alive and you need income, this is a great guaranteed income stream that you can tap. We often position it within a portfolio as a multi-use tool, but one that can become a long-term fixed income instrument for the insured. So a pretty neat, pretty cool rider for us. In addition to that, we have our accelerated access solution rider, and this is our chronic illness rider. Works the same in New York as it does outside of New York. And I'll come back to this, but we are the only chronic illness rider that works like that. And there's 2 key points to that I'll come back to in just a moment. But just to set the stage, this is a cost rider. You pay for it. It's a guaranteed dollar for dollar chronic illness rider. So it's not one that's included with the policy that we then discount or underwrite on the back end. If you have $1 million policy and this rider's on 100% of the face amount, you have $1 million of benefit dollar for dollar, period. So just to make that clear, as I know there's different types of chronic illness riders, available out there today. And so I referenced earlier that our rider is really unique in New York, and there's two reasons for that. We're the only rider in New York, both long-term care or guaranteed chronic illness, that both have removed the permanency requirement. So you can use this for temporary claims within the state of New York, and have a 100% waiver of all charges when you go on claim. So let's back up and address the first one first. Using this on temporary benefits. Most chronic illness riders outside of New York, you can now use for temporary benefits. Companies have updated those riders, but most of the riders within New York are still the older version. Prudential, for example, who has a very similar rider to ours outside of New York, they still have their old rider available in New York, so you can't use it for temporary impairments. The impairment has to be deemed permanent for you to go and claim with that rider in the state of New York. And then the other thing I mentioned, a full waiver of charge. Well, you do have other chronic illness riders that have a full waiver of charge in New York, but the true long-term care riders, you can see three that we have listed here, do not. And so that gives us a bit of an advantage, especially if you have a temporary claim, and that we're waiving all charges. Period. There's no ifs, ands, or buts there. We're waiving 100% of all policy charges. So I can say this is clear as day. Even though we're being recorded, I'm still going to say it. You don't have to pay premiums when you go on claim with us. Period. Full stop, end of sentence. And if you do end up having a temporary claim and come back off, you're not going to owe a catch-up premium as you would with some of these carriers. And you're not going to have a substantially reduced benefit beyond dollar for dollar. It's always going to be dollar for dollar based on what you took out. And your remainder premium, when you resumed it, would not be your old premium, but would be a new premium based on your remainder benefit. So very clear, very transparent. Also, worth noting here, we are a pure cash indemnity benefit. Not only do we not have a facility confinement requirement, we don't even have a requirement that you be on a plan of care with a licensed medical professional. So if you think about most long-term care in the US, 80% of that today is performed in the home, and 80% of that is performed by a non-licensed person, usually a spouse, an elder child, some other family member that steps in and takes care of the impaired person. And that's really difficult to navigate, if not outright impossible, if you have a reimbursement benefit. Ours is pure cash. You can spend it directly on long-term care costs. You can use it to offset the lost wages of the impaired person to the caregiver, or spend it on something completely unrelated. As long as you're eligible to be on claim, you will be able to get that payment each and every month, no matter what. Beyond that, a couple things worth noting before I close out and hand it over to Joyce. One thing to mention is it's a bit unique to us is that if you have an increasing death benefit, whether it's an option B or it hits corridor on its own, your benefit base will go up with that. In addition to that, worth noting is that in New York, we do not have an elimination period, whereas you have, especially the true long-term care riders that have service day elimination periods. So if you think about that, if you have a 90-day or 100-day elimination period, not only do you have to be on a plan of care with a licensed medical person, but they're only counting the days that you actually get care. So if you're only getting 3 days of care per week, that 90 days or 100 days is going to take a really long time to get there. In New York, we have no elimination period. And even outside of New York, we have a 90 calendar day elimination period, regardless of how much service you're getting. So just a couple differentiators for us. And one last thing, but wait, there's more. One last thing on the chronic illness rider before I move on is a little obscure kind of thing on the bottom here, but something I want you to notice when you look at our benefit options. Now you can see across the board here, 2% monthly benefit option is the standard. And then you have many carriers that have a 3 or 4% on top of that, which can be useful for smaller face amounts. But what you see with us that you don't have with anybody else is this third option, the Irs Per Diem option, which will always give you the HIPAA max at the time of claim with almost no cap on that. I'll come back to that in just a moment. But if you think about it, say you have a $200,000 face amount policy and you choose a rider that has a 4% monthly benefit, that's $8,000 per month, which is a pretty good chunk below the current HIPAA max of $12,000 and change per month. With AIG, if you picked the Irs Per Diem option, we'll give you that full $12,000 per month. Now, you don't have to take it off, you don't need it, but it gives more control and more flexibility to the policy owner to be able to take as much funds as they need to in that time of need. So the only cap on this is that the minimum time frame we pay out a benefit is 12 months. And so what that equates to, you just do the simple math, 100% of the benefit divided by 12 months is 8.3% per month. So our rider can more than double the access of the next closest one. So just a little bit of a differentiator for us. And I know I'm heavily running into Joyce's time here, so I'm going to do a quick, just a quick talk through on some underwriting highlights and sweet spots. Our retention is $10 million for permanent. It's only 3.5 on term, but we do have good auto bind limits on both if it's not a jumbo case. We do have a flex points crediting program, which is our name for a healthy credit program, which can allow us to improve ratings if you have clients that have done things like routine colonoscopies and mammograms. And there's a whole list of things that Carmen has that we can expand on further as appropriate. Also, expanded standard. Through age 70 on all permanent cases, we shave table B to standard, no questions asked. We don't even have a table B pricing filed. So if you are table B on our IUL or GUL through age 70, you're automatically going to be standard. And that also goes for conversions too. So if you had a table B term case, it's going to convert to standard. So just some kind of neat things to keep in mind. Two last things I want to mention before I turn it over to Joyce. One is when you look at cancer, how we treat cancers, we do have a handful of cancers where we can look at best class. So there's non-melanoma skin cancer, cervical cancer, stage 1 seminoma, papillary thyroid cancer, and remote history of melanoma in situ. If they've all been resolved and you've had good follow-up, you can be best class with us. And the last thing I'm going to throw out there to end on this note, I guess, especially with the the prevalence of northeastern states where this is now legal, marijuana use we're relatively liberal with. So you can be a declared marijuana user up to 8 times per month, and we'll still give you best class non-smoker. So pretty more and more relevant these days with what's going on with the different the different states and whatnot. So with that, I'm going to take a step back and I'm going to turn it over to my better half, and Joyce is going to do a demo of our website and some of its capabilities and programs, which I think you'll see set us apart as well, and can help you both connect more with your clients and make more sales. Joyce, it's all yours.
Great. Thank you so much, Steve. So yeah, my name is Joyce. I'm the internal wholesaler. Anything illustration related, any product, feel free to come to me. But today I wanted to share with you our marketing resource, specifically our Retire Stronger website. As Neil mentioned, now we're doing more virtual presentation. There's some tools that our marketing team built out that can help you guys, present better when you're doing a Zoom meeting in front of a client, doing some client prospecting, and just start some client conversations. So I'm just going to do a quick demo on our website. When you log on to our website, Retire Stronger, on the right-hand side, you'll see all the resources. You can log on to Connects, and here there's also a search bar if you want to search for a specific product or specific sales idea. You can do a search, but I'm also going to do just a quick guide to show you guys where you can find our product guides. So under the product tab, if you can see on the screen, and I'm just going to take accumulation IUL as an example. On the left-hand side, you will see where we store all of our sales concepts. So any one-sheeter sales ideas you will find under sales support. On the middle would be any kind of PowerPoint, maybe basic breakdown of what is an IUL, talk about our chronic illness rider. These are all going to be in PDF form or PowerPoint form. And on the right-hand side under products will be our, competitive analysis, any type of agent or consumer guides you'll find on here. And I will draw you guys' attention to the New York products. So we specifically created a New York Playbook that you can click on and reference to all of the products that's available in New York, even to, our Reg 187 requirements. You can click on there, but I'm just going to take the IUA as an example. You'll find all the New York specific playbook and highlights and producer guides on here. So I find it super helpful. So that is our product guides. The second thing that I will hit on is our campaign in the box. So the idea is really simple. Our marketing team created this virtual marketing assistant tool called Campaign in the Box. We want to make it easy for you guys to promote or start a conversation. So you can simply copy, paste, and send it out as an email campaign. So again, I'm just going to do a quick demo using long-term care expense as an example as a topic. You click on the pre-built campaign and you basically download a 4 weeks worth. So week 1, 2, 3, and 4. So I'll go back to week 1 of emails that you can just click and copy and paste, or even infographics that, it's a attention grabbing, you can attach to an email just with statistics and just basic ideas so you can start a conversation on the long-term care illness. And then the last thing I really like is the social media aspect. So you can copy and paste the link and share on LinkedIn for anyone to take a look at. So that is our campaign in the box. The last thing that I will share is a website that we've built out, and it's under client conversation, under sales tool. It's called Life with Confidence. This website is built specifically for you to have a conversation about IUL with a consumer that maybe is not familiar with how an IUL works. And this is, I would say, a interactive PowerPoint that goes along with how an IUL works. It breaks it down to, definition and, how it works. And you can click next and scroll down. There's, statistics and just, colorful graphics, for you to have that conversation with the client, and you can click through that on there. So those are all the tools that's available on Retire Stronger. I'm going to stop sharing my screen and I will pass it back to Neil for any closing comments or start our Q&A session.
Great, thanks, Joyce. And if you don't mind me interjecting real quick, Neil, just a couple things on the website and the material. In particular, those infographics, Joyce brought one up on long-term care. We have, I think, 7 or 8 different ones targeted at different things like retirement planning and whatnot. Those are great tools to use to, I hate to use the phrase disturb clients, but I think we have to do that sometimes to open their eyes to the planning that they haven't done and what we can help them with. And it really will point out both the disparity in what they may not yet have done, but also the hurdles that they're going to encounter. Like things such as how much money they'll need in retirement for healthcare. Like the average 65-year-old healthy couple today is still going to spend $360,000 in out-of-pocket healthcare costs in retirement, which is pretty eye-opening because you know what? We're saving all this money for retirement. We're thinking about going to dinner and on vacation, right? Not spending $360,000 on healthcare. So just to get folks to realize that and that they may need some additional tools in their portfolio can be very helpful. And then the second thing I wanted to mention real quick is just that Life with Confidence program is pretty neat. It's client approved. That's what it's built for you to use with your clients. And it really goes into detail showing them the tax advantage of life insurance, the volatility control that IUL can provide, and how that can be a good solution for you. So we've got the one tool to disturb them, and then one to make them feel better about what you're showing them. So with that, I will turn it back over to Neil to moderate any Q&A.
Yeah, I think my one comment is, and I'm so impressed, and this is a lot of stuff I haven't seen before, is the ability to pivot during COVID has made us extremely successful and rise, and do more business the last 2 years than ever, working out of our houses. And part of that is social media and LinkedIn and some of the other tools that we have, whether it's a Zoom meeting like this or a LinkedIn meeting, or we even with our clients and agents and attorneys and accountants that we've been doing every week, or many of us have. And having the tools that AIG has put together, and a lot of companies have, but really having access and utilizing them. I mean, the tools are here, but the most important thing about this meeting today is we have the internal support of carriers like AIG and US Life, Joyce and Steve, who help us out when we have a problem. You know, many of these companies, people buy policies. Not only do they not know who their agent is, trying to get through the maze of these companies and finding out, you know, details. Is my product convertible? Is it this? Is it that? Trying to get advice is so difficult, but having the internal contacts in these companies has helped us in so many situations, so many cases, in helping our clients. And that's what we want. And that's what we look for. And that's why we're relevant. And that's what we need to keep doing. And AIG has given us the tools to be even more relevant and continues to do that. So thank you both for sharing today. And the information is invaluable, and we anticipate on using it. So thanks again. If there's any questions, you can pop them in the chat box. Not, we'll move on to the next speaker. And thanks again, guys, for doing a great presentation.
Great. Thank you for having us,
Thank you,
Neil.
everyone.
And, you know, we look forward to seeing you hopefully in person sometime soon.
Absolutely. Absolutely.